Hi guys, Melissa Chagoya here, coming to you from my live office. Oscar and I were trying to do a live video so that we could do it as like a question answer type with you guys, but unfortunately Facebook I guess doesn't allow that as an option anymore. So we're going to each do our own video to share with you. The topics we were going to talk about were just mortgage misconceptions, and the first thing we wanted to talk about was Fed rate versus mortgage rate. So many people are questioning if rates for mortgages have gone down to zero because the Fed has announced that their rate is down. Unfortunately, mortgage rates and Fed rates are kind of like apples and oranges. They're totally different. Even though they're in the same family, they are not the same. Fed rate affects things like credit cards or personal lines of credit, auto loans, things like that. Mortgage loans are totally different and do not follow the same pattern, basically. So rates for a mortgage are not at 0% today. So misconception number one we wanted to clear up. Misconception number two is that folks think we know what rates will be tomorrow, that we're able to predict that. But unfortunately, we don't have a crystal ball. There's so many things that drive rates up and down right now. And the reason we're seeing rates up higher is because of the demand. There was a big refi boom earlier this month and in past months, and rates were so low that people were refinancing. And because there were so many folks refinancing, the demand went up, and so as a knee-jerk reaction, the lenders actually raise their interest rates to kind of slow down the production so they could keep up with it. And the third misconception we wanted to talk about is the rates vary depending on a person's credit score, the amount of a down payment they give, and the type of financing they do. So for example, somebody who has a 740 credit score is not going to get the same rate as somebody with, say, a 580 credit score. The person with the lower credit score is going to have a higher interest rate because there's more risk involved because they're their score. Or a person who does 3.5% down versus someone who does 20% down isn't going to get the same interest rate because that's one of the determining factors on your rate. So I hope this was helpful. Some of the mortgage misconceptions, we will be doing these from time to time just to answer questions that we get from clients. So we want to share the information and keep you guys informed. Thanks.